I just wanted to welcome our initial participants. We're going to go ahead and get started in a few minutes. I just want to leave some time for folks to trickle in. For those just joining us, we're going to go ahead and get started in a couple of minutes. We're just giving people time to join the links. All right, given the limited time, we'll go ahead and get started. First and foremost, I wanted to welcome everybody to the Using Stablecoins for Treasury Payments and Liquidity webinar hosted today by Alpha Point. My name is Bethany Patterson. I'm a senior account manager here at Alpha Point. With me, I also have Joaquin Yosa, our chief product officer, and as well as members of his team to help demo and answer any questions on the product. Just a friendly reminder, there is a Q&A feature for the webinar, and it's recommended that you guys use that feature throughout the webinar, asking questions as we're covering any of the topics or going through the demo to make sure that we are getting a timestamp of when you ask the question. So any thoughts that you guys might have at the end of the webinar, we'll save 15 to 10 minutes to go over any of those questions. So let's go ahead and get started with some questions. So Joaquin, Treasury teams have been managing liquidity for decades using the existing banking rails. What's changed in the last 12 to 18 months that's causing institutions to seriously consider leveraging stablecoins?
So first, thank you for having me here, and thank you for our audience to be here. The main reason why the adoption of the stablecoins have become more mainstream, especially for treasury and payments, is regulation. Regulatory bodies around the world have been working really hard through the last 2-3 years to try to get the stablecoin regulated so that everyone can feel more comfortable and customers can be protected from the caveats of dealing with the stablecoins. What that means is that now financial institutions, very large ones, if not the largest of the planet, are embracing stablecoins as another form of payments, as another form of store value, and they are welcoming the use of this digital version of money. For the adoption itself, a lot of the organizations that are adopting stablecoins are doing so for very major reasons. One of them being the instant transfer value between wallets, which means that if you have enough liquidity in both ends, you can transfer that value in real time. While as today, if you want to transfer, let's say, $100 million between Qatar and United States, you're going to need to do in a series of wires, and that's going to be through correspondent banking, and it's going to take days, unless you have very big cash flowing agreements with banks, which is going to cost you a lot of money at cost of capital. So in treasury terms, the stablecoins is going to ease a lot of the burdens and frictions that you have today managing your money for your organization and for your clients. Not only that, but just the mere fact that you're doing these instant transfer value removes the constraints of having pre-funded for you to be able to do, for example, mass disbursements in real time. So let's say Uber wants to pay their drivers all over the planet. Uber has to have pre-funded the amount they have to pay that day or the following 2 days with the institution who is doing the disbursements, because the money doesn't transfer in real time. Therefore, the payer at the end of the day, the company that is doing the payments, the payment service provider, needs to have that money to be able to disperse it. So there is a cash constraint problem in form of pre-funding. So stablecoins help remove that burden, since the stablecoins means that transfers are making in real time. The value is transferred in real time. So Uber transfers the stablecoins to the payment service provider, and then the payment service provider can do the disbursements in real time in any of the countries they're working. So all of those regulations are going to be are the ones that are helping all these large organizations to embrace the stablecoins and thus bring liquidity outside of the US for stablecoin use.
Okay, great. And so we often hear that stablecoins and tokenized deposits discussed together. They're often like coupled together somehow in the conversation. How should Treasury and banking leaders think about the differences between these two? And where do you see each of them fitting into the market in the end?
So at the beginning, when the tokenized deposits were proposed as an alternative of the stablecoins, people thought that tokenized deposits will become a more secure way of dealing with digital forms of money, since the tokenized deposits means money that is already insured by the FDIC behind a bank account in a bank. Later on, as the market evolved, the users started discovering, and by the users, I'm talking about the financial institutions themselves, they started discovering that both don't compete between each other. They complement each other. So while as a stablecoin is an open form, seamless form of payment and global transfer of value, where you're going to have liquidity to exchange it for fiat all over the planet, tokenized deposits are just a closed loop version of a digital form of deposit, meaning if I receive, like, as an example, if I receive $100 worth of USDC, I know I can go to my local exchange and get that $100 worth of USDC in my local fiat anytime. While as if I receive a tokenized deposit from a bank from Madagascar, very unlikely I'm going to be able to cash out that tokenized deposit into my local fiat, unless I'm in Madagascar and I have access to that bank. So what tokenized deposits are going to enable is a different form of digital store value that allows banks to offer stablecoins, preserving the cash in their balance. So let me give you an example. Today, if a bank offers Treasury with the stablecoins to their merchants, and the merchants choose to keep the value in stablecoins rather than in the bank account, that money is no longer in the bank accounts of that bank, no longer in the balance of the bank. Is going to be that cash is actually at the reserves of the issuer, in this case, for example, Circle, and its banks, which means that the cash is driving away from those banks who are offering the stablecoin store value option. While as if you offer tokenized deposits to keep the balance in the digital form, and then you enable a real-time exchange between your tokenized deposits and the stablecoins, you're keeping the cash in your bank, and the cash remains in the assets in the balance of the bank. And you still are offering the stablecoins option for payments and for disbursements and for receiving directly. So it helps financial institutions to offer digital currencies, stablecoins, to their customers, protecting their balance.
Yeah, that makes a lot of sense. So then for a treasury team that's managing liquidity across multiple entities, banks, and jurisdictions, Where are you seeing the biggest operational efficiencies for them today?
Mostly in settlements and international transactions. So, for instance, I've seen use cases where large financial institutions need to access to assets that are located in a different country, let's say US, let's say money market funds, tokenized money market funds, and they need to buy them on a Sunday evening. Stable coins allow them to buy it in real time, those tokenized money market funds in the billions instantly rather than having to wait days for those wires to settle and then the money market funds to be in a different position that they wanted to buy them. So settlement and international payments are big wins for stablecoins for the treasury management. There are also other big wins. Like, for example, if you're managing your treasury with the stable coins, you no longer have these fractionalized accounting and reconciliation in between your subsidiaries and entities. It all sits within the same ledger, and therefore accounting and controls can happen in real time. And it allows your accounting team and your financial team to be able to find every single dollar and of every single transaction with ease, rather than having to go through all these reporting analysis and the ERPs that you need to put in place. You can also have access to financial markets you didn't have before. So if you have the stable coins, if your treasury team has the stable coins, they can now access Benji tokens on the finance, for example, BlackRock's Beetle tokens, which are money market fund based off T-bills or treasury, which means that you have now more options to diversify your yield and performance of your capital rather than having to transfer it out to another bank or keeping it in like low yield accounts to make the money that your company has to perform, right? So stablecoins allows you to do that in a much more faster and slimmer way than you would have done before.
Yeah, absolutely. That makes a lot of sense. So, if cross-border payments remain one of the largest pain points for finance teams, what specific treasury workflows are being improved through stablecoin settlement?
Some good examples that come to mind: global treasury between entities that we've talked before. That's a big win. Account payables and receivables become more streamlined rather than having to wire money out or receive wires, settle them, match them, figure out if the receiver and the sender receive the money, and everything is in the limbo through days. With the stable coins, you can actually pay contractors and providers, your manufacturing team, for example, in Vietnam, you can pay them in stable coins in real time. They have the ability to convert that into their own currency, which means that you're technically paying them, and it allows them to receive the funds in real time, which makes the whole conversation much streamlined. The best part out of it is that it allows programmable scenarios, right? So those net 30 payments, those supply chain based triggered payments can be coded and programmed into the smart contracts. And therefore, the disbursement of the payments can happen when they are required to be done, and therefore the payments are guaranteed to happen as agreed on terms. So you can have a supply chain use case where until you receive the container in the port, and then the port confirms that you have your container from whatever manufacturing facility you hired in Asia, that can trigger a smart contract that can release the funds for the payment, and your treasury team doesn't have to scramble around to figure out how to do that payment. So all those can happen programmatically, which is a de-risking of your procedure-based compliance and controls into a more systematic control, right? Which is always preferred.
Yeah, absolutely. One of the things that I'm always hearing is that treasury leaders are intrigued by like the 24/7 settlement. So that speaks a lot to what you just said. But they're also worried about, the governance and control. So from your perspective, how are organizations balancing that need for speed and the pace in which the industry moves with that oversight?
There is a misconception that because you can program the stablecoins, you're going to be able to control it better. It always stems from your compliance and policies, how strong they are before you embed them into the smart contracts that you're going to put around your treasury, right? So um, the best part of the programmability is that you remove the human factor from the control. The today we run our controls and security and information based off procedures that humans have to take care of. That's why we have to double entry amounts in our bank applications when we do transfers in our treasury team, for example, or we have to have 4 eyes before a transaction is being sent. When you embed this systematically, that removes the burden of a human mistake, which is something that reduces the risk of the transaction ability of the treasury teams. We all have heard situations where an extra zero has been added to a transfer or a wire has been sent with the wrong amount and it had to be recovered manually. When you have programmable compliance and policy, it means that it's embedded in the smart contract and those controls exist there in the smart contract. So if the wrong amount is typed or received or sent, it will be blocked before it happens when the smart contract is going to execute the transaction. So there is a lot of benefit for all these managers who are worried about being in real time because all the controls are not process human based. They are systematic in a treasury system based off of stablecoins.
Okay. So then, as organizations begin operating across multiple chains and multiple digital asset networks, what new treasury challenges are actually going to emerge from that landscape?
So there are many advantages and goodies that come with the stablecoins, but that also comes at the expense of the complexity of what it brings. Today, there are more than 100 blockchains that stand the reasonable amounts of the stablecoins. So you're gonna, as a treasury team, you're gonna find yourself having to have wallets in every renowned blockchain to be able to receive funds. That or opening an account in Coinbase, which supports most of these chains. But then again, you're using a tool that is not designed for treasury. You're using a tool that is designed for exchange. So there are a lot of complexities that stablecoins bring to the table. So does the liquidity. When you receive funds in one of those blockchains, that doesn't mean that you have those funds available in every blockchain. You now have to port them from one blockchain to the other. We all have heard an example, the typical example where I receive $1 million worth of USDC in Solana network, but I have to pay my vendor in Ethereum network, which means that now I have to figure out how to convert those $100,000 worth of USDC into $100,000 worth of USDC in Ethereum, which is a nightmare. It's slow and it doesn't work well. So you have to figure out how to find that liquidity process. Again, you'll have to go with a Coinbase, you'll have to go with a provider. This is one of the major hurdles. All these are major hurdles that we've been working really hard to solve with our treasury product, for example.
Great. So then, looking beyond payments, how do tokenized assets and on-chain financial instruments potentially change treasury management over the next, 5 years?
This is one of the most exciting parts of the stablecoins. There is a major friction for the treasury teams to optimize the use of the money. When you are a treasury team or you're a CFO and you have millions in a bank account sitting and doing nothing, that's a nightmare. That money should be performing. That money invested should generate yield, should generate revenue, because money sitting down is money losing value. So today you have the CDs, you have like a lot of mechanisms to sequester that money and put it to yield value back to you. But all those products are complex. They mean that your money is going to get stuck for a certain amount of time. If you want, the more time that money has to sit down, or risk it in more risk products, right? With the stable coins, you have access to a raft of yield generating DeFi protocols and products that allow you to instantly put your funds to generate yield and get those funds back instantly within a second of putting it in, you can put it out. There is no such thing in the fiat world today that can generate the yield that a DeFi product generates today with the ability of cash out without any penalties. That access to all those products, and we're talking about very important products that are not pure DeFi. We're talking about, for example, treasury-based yield products from Franklin Templeton and BlackRock or on the finance. You can access them with the stablecoins in real time. What does that bring is that now, as a treasury team, you have the ability to react in real time to the cash flow needs of your company while that money is actually generating revenue for you. So you can have your funds and most of your funds in stable coins sitting in these yield generating products. And then the moment that you have a burst of cash flow need, you can get that money instantly so that you can use it for your company's cash flow. So these new era of tokenized assets and tokenized financial products mixed with the stablecoins treasury is going to bring a huge benefit for treasury teams to be able to optimize and maximize the performance of the money that is sitting down in your accounts.
That makes a lot of sense. And if there's a lot of benefit for these treasury teams, then what are the most frequently asked questions for these treasury teams and these banks right now? What do
So
they care about the most?
that is a great question. There is a split, right? Banks are more focusing in how can I get more money in my bank accounts, leveraging stable coins, or how can I get more customers to stick with me because I'm offering stable coins, right? So banks are often asking about cross-chain liquidity, tokenized deposits, compliance and policy management. That's their core focus. They want to know that it's safe, sound, regulated, and then B, that it's not going to pull money out of their accounts and their balance, and C, that their customers are going to be able to use it seamlessly rather than having to go to Coinbase and start using it. They want them to use their own tools that the bank offers. From the company side, what they're looking for are mostly yield and revenue generating products with the stable coins, access to fiat and stablecoin seamless interactions, so that when they receive stablecoins, they can convert it to fiat to do all their payments, or they can perform a fiat to stablecoin conversion in real time, so they can perform the payments in stablecoins that they need to. So those are the most common, like the most frequent questions that we get asked about treasury and stablecoins.
Okay. So then if we fast forward 3 years, what does a modern treasury organization look like with stablecoins, tokenized deposits, and tokenized assets?
So I'm going to venture myself, and I'm going to introduce the AI in the conversation. But let's start with the foundation on how the stack is going to look like. From the bottom, what you're going to see is a store value in tokenized deposits in the different banks that the organization operates, with a mix of the stable coins as store value that allows the company to put those into performance with some yield products that you may have left and right with RWA tokenized assets, right? So you can see some automations happening where there is an estimate of what the cash flow of the company is going to be every day, and therefore optimizing the yield of the cash that you have within your treasury. On top of that layer, what you're going to have is AI. We're talking about agents that will automate all those procedures for the treasury team. And your treasury team is mostly going to supervise that all of those flows in between the yield and no yield, the cash flow, the payments, the disbursements, the AR and APs are flowing adequately, right? And then finally, there's going to be strategies where these type of automations are going to allow the treasury team to become another revenue source for the company, an important one. While as before, your cash free usually was something that you would want to balance and not have as much. You will always want to have as little cash free as possible because that, again, the money sitting down loses value with time. So you always want that money to perform and create more value. So the treasury now with these new tools are going to be able to make that different approach, which means now more cash free means more access to this treasury revenue.
Okay, so one final question before we switch gears a little bit and head to the demo. For organizations that are just beginning to explore stablecoin treasury, what's the first practical use case they should evaluate?
So first and foremost is we're talking I'm talking candidly, right? Obviously we want to sell the use of the stable coins, but it has to be meaningful and it has to be something that you need. So first and foremost, I would ask how many of your vendors, contractors, providers, distributors are willing to use the stablecoins with you. If you're not using the stablecoins with them, that doesn't mean that they don't use them. It may be that because you don't use the stablecoins, they're not using them with you. But the moment that you spark that conversation with them, you'll discover that a lot of those vendors and a lot of those providers and a lot of those distributors and clients of yours are already using stablecoins. So once you understand that you can port some of those flows into stablecoins, that's when you're going to see that using Treasury with the stablecoins is going to benefit you big time. The moment that you start doing these exchanges in stablecoins, settlements and payments and receivables in stablecoins, what you're going to see is a much more fluid cash flow coming in and out of your treasury, which is a huge optimization for your treasury. So rather than having to wait for payments to come in, trying to figure out how to reconciliate them with the different invoices, getting different softwares connected together, you're going to get payments happening in real time, payments being received in real time, and reconciliation can happen within integrations with their ERP in real time. So you'll discover a new world of treasury that you have not seen before, only if you've had your treasury connected to real-time payments, for example, in the US. And there are very few use cases that are leveraging that, maybe FedNow also. So there is a huge ramp up benefit from that first step. Then secondly, what you're going to see is you're going to have access to these yield products that are going to allow you to offer to your CFO new revenue sources. So that is another major benefit that you're going to get into the mix. And then finally, the fact that you have fiat to stablecoin and stablecoin to fiat instant exchange anywhere in the planet today virtually means that your bet on stablecoins is safe. You're going to be able to port that stablecoin into fiat anytime you need to, and vice versa. You're going to be able to port into stablecoin the fiat that you have in any time, right?
Great. Well, thank you so much, Joaquin. I really enjoyed the conversation. We're going to shift gears a little bit now. I'm going to hand the reins over to Claudia, who is a product manager here at Alpha Point. She's going to be giving a brief demo of the Treasury platform here at Alpha Point. I'll go ahead and stop sharing my screen, Claudia, and you can take over whenever you feel ready.
Thank you, Bethany. Just let me share my screen now. You can see it now, right? Okay, thank you. So today I'm going to walk you through the journey of Karen Cooper and Ana Lucia Morales, two finance employees that work for Norwin Analytics, which is a US-based company that decided to move their own funds and treasury and finances into the Treasury platform. Karen Cooper is the admin. You will see that we natively manage two different roles. A admin role who has access to all the suites and products that we offer inside the Treasury platform, and also a clerk a role that is focused on executing payments and also receiving payments. So they have two different views, and we will go over them. Starting with the admin user, there is a dashboard where every admin can see at first glance how the treasury is moving. So we have some graphics and some tasks that the user can take a look and action immediately. The first thing that we will want to do inside the Treasury platform is funding the platform in order to allow users to do payments. So I'm going to go and hit the new deposits. We offer two different methods, wire transfer and blockchain. So I'm going to continue and hit the blockchain. This is as easy as selecting the asset that I want to receive. And the system is going to provide me with a address that I can use to transfer funds. So let's say that at the beginning, Norwin Analytics has an existing wallet, external wallet, and now they want to move their funds here. So I'm going to copy this wallet address. I want to fund my treasury with USDC on Ethereum, and then I'm going to close it. Next, what I need to do is I'm going to go and set that funds inside my MetaMask account that I already have. I'm going to send, let's say, to this address, 100 USDC, hit continue. And that's it. So the transaction is pending, but once it is confirmed and detected by the blockchain, it will go directly to my Treasury platform. Currently, I have this much amount, and once the transaction is confirmed, then I'm going to see the activity performed here and completed. My funds are going to be added, and I'm going to see the funds added in my USDC balance. So let's wait some seconds, and then I'm going to be able to use those funds. Let me refresh. Let's continue for a minute because it takes a little bit of time. So once I have the funds, then I can do a payment. So for example, in order to be able to do payments, I need to add some beneficiaries. We offer the ability to add beneficiaries for individuals and companies where we can add beneficiaries ahead and select their preferred network and asset to receive funds. And then I need to execute the payments. So let me check if we already received. Not yet. So let's continue with the payments. I'm going to do a new payment, and I'm going to select Bayside in order to execute a payment. I'm going to click a 50 USDC. Here, as you can see, the beneficiary is selected to be paid in USDC. I enter the amount. I enter a reference code that I would like to set. Let's say I have a reference invoice that I want to pay to them, and click next. Here, I see any detail that I need to confirm for my payment, and confirm. In order to confirm the transaction, I'm going to sign the transaction. Sign in. And this transaction is going to be going in some seconds. It's a 50 USDC transaction. So it's confirmed. And here, as I decided to pay to Bayside, I have another account for Bayside. Let me look for it. Here it is. So I'll be receiving 50 USDC once the transaction is confirmed. So let me check. Then let me check if we already received. Yes, we already received the funds. The funds are confirmed here. And once the payment is confirmed, then the money will also go out. Then if I want to pay to more than one beneficiaries, then I can go to the disbursements directly, where I can download a template of the beneficiaries that I currently have and upload that payment. So I'm gonna select and enter the name of the batch, select a CSV file where I have 3 recipients. Then I hit click next, and I have 2 options like start processing the payments immediately or schedule for a specific date. I'm gonna process immediately. I have the amounts that I am paying. These are the 3 beneficiaries and the amount I am paying to them. And then I click confirm. I also need to sign the transaction, and it's going to start processing. When it's done, every user is going to get their funds in their wallets. So if we have some problem like here, then we will be seeing it. Let me check what happened then. And next, I'm going to show you an invoice where I'll be able to request some funds to any company. So I'm gonna select 2 diamonds, and I'm going to request 75 USDC. We have the different networks that we are managing currently. I'm going to request USDC. We have some payment terms that we can select, and also we need to add the concept. So I'm gonna enter the concept, select the start date for the invoice, and add some description for the invoice. The notes are optionals, and we also need to add a reference code if that is something that we have. We are also able to add some supporting documents if we want to have, and then we can review the invoice. Once we generated the invoice, the company or the payer is going to receive an email requesting the funds. So let's hit submit. And this is the pending invoice that we see. The user is going to see the email. Let me check. So we have this email that we are receiving. We can view the invoice and also copy the address here that we have. So let's say that we have this was requested to Diamond Systems. Let's log in Diamond Systems account. And let's send these funds here, 75, and continue. Confirm. So once the invoice is already detected, as it happened with the deposit, it will be added here. We need to wait for some minutes, and also our funds are going to be increased by 75. The last thing that I'm going to show you is the roles that we manage here. So for example, here we have the team roles. And as I mentioned to you, we have 2 different roles. Natively, the admin, who is allowed to perform every action inside the system, and the clerk, who has some limits on paying and doing some disbursements. So for example, if Ana Lucia, as you will see next, is trying to do a payment that is greater than 100 USD, she will need to have an approval and another signing for a second person, a second signer. Here, you can see all the signers that we have. It's the threshold that we already selected, and all the signers that we have configured. So we will also perform a payment now, and we will see how it requires an approval and a new signing. So let me check if we already have the invoice. It's still not detected. Let's wait some more minutes. I'm going to move to Ana Lucia, as I mentioned to you. The dashboard is different. She doesn't have access to all the treasury values, and all that she can see is the pending items, doing and the options to do and execute some payments. So I'm going to go ahead and select a new payment with the threshold, so we can see that it is hitting the threshold, sorry. So I'm gonna click 110, which is bigger than the threshold. Selecting a pending payment option. Next, and confirm and send. So the payment is submitted for pending approval. As you can see here, my pending is pending approval. And then when I go to Karen Cooper's dashboard, then she can see that there is a pending item to be approved. We can review the pending payment, set any information if there is something that needs to be fixed, or approve it. So I'm gonna click and approve it. And the transaction is still not going out because it's awaiting some quorum. So I'm gonna go ahead and let me check with the payments here, the details. And let me check for the transaction to be signed. Wallet, TBT. Oh, I cannot see now the option to sign the transaction. So in the next session, I can show you that. But once the transaction is being signed, then this payment is going to be executed for Justin. So let me go back to invoices to see if that one was already detected. No, we don't have the transaction. Let me check. Oh, yes, it is here. It is, no. No, let's wait some more minutes. Maybe we can go ahead with some questions. And once the transaction is detected, I can show it. Bethany, that's is all I have for today's presentation. Thank
Great.
you.
Thank you so much. We really appreciate you taking the time to demo the platform for us, Claudia. Let me go ahead and check the Q&A queue to see if we have any open questions. It looks like we have no open questions, so we can go ahead and wrap up the webinar there. One final note, if anybody has any questions about AlphaPoint's Treasury platform, please feel free to reach out to any of us directly. We will be providing you guys with a recording as well as our contact information for our sales team and for myself of this webinar. Thank you all so much for attending.
Thank you, everyone.
Thank you.